Commissioner Ken Kobylowski has served as a member of Governor Christie's cabinet in charge of banking and finance for the past 2 years and has been actively involved in New Jersey's Sandy recovery effort. Commissioner Kobylowski's team has been specifically responsible for encouraging the settlement of insurance claims following Superstorm Sandy and establishing a mediation process to expedite claims. Welcome, Commissioner Kobylowski.
Thank you. Appreciate it. Thank you. Good morning, everyone, and thank you, Scott, for that kind introduction. And Congressman and Freeholder, thank you for inviting me here today. It's really a pleasure. I don't often get down to Cape May in the winter, and it really is it's a nice treat to get down here. I know my wife and my kids would be jealous when they found out that I was going to be down in Cape May. Although I was a little bit struck, and I never realized that the construction is actually underway to remove the traffic lights at the southern end of the parkway. When I was here in the summer, none of that was in motion, and it struck me as a little bit odd, but I think it's a great improvement. So as the Congressman spoke a little bit about what's going on at the federal level, I think this gives me a great opportunity to speak with all of you about what's going on at the state level and what we're doing at the State Department of Banking and Insurance. Oh, okay. As to what we're doing at the State Department of Banking and Insurance regarding Sandy, what happened immediately after Sandy, what did the storm look like from an insurance point of view, and perhaps most importantly, what we are seeing and what we're projecting as what's going to happen in the future regarding particularly flood insurance and more generally homeowners insurance and business insurance. So what I really want to start with is I'll start with really what happened in the aftermath of Sandy and what we saw, because as the Congressman spoke about the NFIP, the National Flood Insurance Program, that's obviously a federal program. It's run by a federal agency. We at the state have absolutely no regulatory authority or no influence whatsoever with that program. And Sandy, by and large, was a flood event. And as all of you and most of you know, flood insurance is not a covered peril, or flood is not a covered peril under the standard homeowners policy or the standard business commercial policy. So what did we see with Sandy? It was obviously the largest claims event we've ever seen in the state of New Jersey. We had, on the private insurance side, more than 465,000 claims filed after Sandy. I'm happy to report that 456,000, a little bit more than that, are already closed. So that's more than a 98% closure rate. So I think the insurance industry as a whole did extraordinarily well in responding to the needs of its New Jersey policyholders. Now, I'm not going to say that there weren't hiccups. Certainly, when you have a claims event as large as that, not every company is going to be perfect. We took in more than 2,000 complaints from policyholders in New Jersey that were unhappy with their settlements with their insurance companies, or just were unhappy with the way that their companies were behaving. I'm happy to report that our involvement in those complaints and helping to resolve those complaints resulted in an additional recovery of more than $6 million to New Jersey policyholders. I think when I use the word complaint, I want to be very careful and very judicious in the way I use that term complaint. When people who feel that they are not being treated fairly, or their insurance company perhaps was not being responsive or was not settling their claim properly, that does not necessarily mean that the insurance company was wrong. And I want to make that very clear. When we get a complaint at the department from a policyholder, we take in the information from the policyholder. We then contact the insurance company to basically get their side of the story. And then we make a determination whether or not the policyholder has a valid complaint. So when I say we took in 2,000, that doesn't mean that there were 2,000 instances where the companies were in the wrong. I just want to be very clear that there were many instances where the policyholder perhaps didn't have a valid claim, or the coverage that they thought they had, they did not have through no fault of the company. So I want to be very clear on that. And overall, the claims that have been settled, the private insurance market has paid out more than $4 billion in damages and in claims. Now, what does the average claim look like that we saw in Sandy? As I said earlier, Sandy was basically a storm surge event. The average payout under the NFIP program is about $52,000. The average payout under the homeowner's policy for perhaps wind damage was only $6,000. The average payout on an auto policy was $11,000. The average payout on, bless you, the average payout on a marine policy was a little bit less than $50,000. So that kind of gives you the scope of what we saw after Sandy, and when I say it was really a storm surge event, it really was. We saw very little wind damage or other types of damage. As Scott mentioned earlier, we set up a mediation program at the state. We set that up in May of last year. It's being administered by the American Arbitration Association. And we did that based upon discussions that I had with my colleagues in other states, insurance commissioners, in particular Louisiana and Mississippi and Alabama and Florida, as to their mediation programs after large events such as Katrina and Ike and Gustav and other large events. And what they said was that the mediation program they found was extraordinarily helpful because it gave people another shot, another bite at the apple before they have to file a lawsuit. What we did, as we are wont to do in the state of New Jersey, is we were a little bit more aggressive than other states. And where the other state mediation programs were confined to homeowners' claims solely, we expanded it. We expanded it beyond homeowners' claims. We expanded it to auto claims. We expanded it to commercial property claims. We expanded it to commercial business interruption claims. And I'm happy to say that our success rate is more than 70%. That means more than 70% of the claims that are submitted for mediation are settled. So the policyholder does not have to file that lawsuit to get back a recovery that they believe is fair and reasonable. I also want to say that that program is entirely free to the policyholder. And if the policyholder requests a mediation, the insurance company must participate. And the insurance company pays the American Arbitration Association $750 for the mediation. Obviously, if the policyholder wants to bring an attorney to the mediation, the cost of that attorney must be borne by the policyholder. It would be unfair to saddle the insurance company with that cost. But I'm very happy to report that more than 70% have been settled. And I'm perhaps more happy to report that when we do our surveys of people who have been through the mediation program to get their feedback as to if they felt it was a good program or not, more than 91% of the people have rated the program either a 4 or a 5 on a scale of 1 to 5, 1 being miserable, 5 being excellent. So I think the people who are participating in that program are really finding it worthwhile, and we're extraordinarily happy about that. So that's kind of a little bit about Sandy specifically. Now, what are we seeing really in the insurance market in New Jersey generally? I think the insurance market is strong. The insurance market before Sandy, particularly homeowners, was a very strong market. To give you a little bit of scope, we have about 2.5 million homeowners policies in the state of New Jersey, and that includes about 490,000 in coastal areas and about 79,000 or so on the Barrier Islands. We have 8 of the 10 largest companies doing business here in the state of New Jersey. And frankly, we've seen a lot of growth in the state of New Jersey and the companies coming in. Since 2008, we have 15 new companies. We've actually admitted 3 new companies since Sandy. Now, you would think you have an event like Sandy, the insurance companies would be running out of the state. We actually have new companies that came in. So we have more insurance companies writing business in the state of New Jersey today than we did before Sandy. They may say, why? There are a number of reasons around that. I think, number one, the regulatory environment gives the insurance companies confidence. And what I mean by the regulatory environment gives them confidence is that our approach at the department as a regulator after Sandy was to be thoughtful and deliberate, was not to beat up companies in the press for every single complaint or every single anecdote that we received at the department. We monitored on a weekly basis the number of calls that came in, where the complaints were, what issue was involved, and were there any particular companies that were showing up more than others. And if we noticed the beginnings of a trend, we would call the companies directly and say, this is what we're seeing, you need to fix it. Now, other jurisdictions, candidly, didn't take that approach. They issued press release after press release after press release, which I don't think is the proper way to handle situations like that. So we called, and we had those, and the companies corrected the issues if there were issues overall. So I think that gives the companies the confidence that they can come into New Jersey, know that they can write an insurance policy, know that that policy will be enforced according to the terms of that policy, no more, no less, and that we as a state regulator are not going to change the rules halfway through the process, halfway through the game, as some other states did. Now, frankly, I got beat up a little bit right after Sandy when I wouldn't allow the companies to impose the hurricane deductible as a result of the storm. Now, for those of you who may not particularly be familiar with the hurricane deductible, but it's a higher deductible under most insurance policies than your standard $500 or $1,000 or $1,500 deductible if the losses are caused by a hurricane event. Now, we have a very specific test in New Jersey, and that test is, number one, it has to be a named hurricane when it makes landfall, and number two, you have to have sustained winds of 75 miles an hour or greater somewhere measured on the ground in the state of New Jersey in order for a company to be allowed to apply the hurricane deductible. Basic and simple. A day after hurricane passed, I made the call that the companies could not impose that deductible because Sandy was downgraded. It was no longer Hurricane Sandy when it made landfall here in New Jersey. The companies, as you can imagine, were not very happy with me. And all estimates that we have say that they had to pay out about $700 or $800 million more in claims as a result of not being able to impose the hurricane deductible than if they would have had to. Be that as it may, the companies, I think, at the end of the day, understood that we made the right call. Secondly, we never changed the rules halfway through the game. We allowed the companies to enforce the policies that they had written. And that may have been to the detriment of some policyholders. I'll readily admit that. But we view the insurance policy as a contract. The policyholder signs the contract with the insurance company. In exchange for a premium, there are certain coverages. If that peril is not covered by your policy, it's unfortunate, but that's just the way it is. That's just the business. And I'm not going to stand here and tell an insurance company that it needs to pay a claim that under the words of its policy, it's not required to pay that claim. So I think all of that gives the insurance companies confidence that they can come to the state and they know exactly what they're going to get, good and bad. They know that. So I think that gives the companies confidence, as I said, and that's why more companies are doing business here now than even before Sandy, because they viewed Sandy as a test. What were we going to do as a state regulatory authority? What were we going to do? And I think they are taking heart by how we reacted and how we approached it. And the other thing I'll point out as to how strong and how good our market is in the homeowner side, we have something called the FAIR Plan, which I'm sure all the insurance people here know. And it's basically the insurer of last resort. If you cannot go into the voluntary marketplace and buy a homeowner's insurance policy, you can get a policy through what is known as the FAIR Plan. Right now, we have, at the end of 2012, we had about 17,500 policies in the FAIR Plan. I'm happy to report that at the end of 2013, after Sandy, we have less policies in the FAIR Plan by 1,000. We only have 16,500 policies now in the FAIR Plan. So again, more people after Sandy are now able to purchase more insurance in a voluntary market than before Sandy. So what are we seeing, particularly in the area of flood insurance going forward? As you know, the Congressman pointed out, the NFIP is going through the reauthorization process, and I hope it gets worked out, and I hope the rates and the implementation of those rates gets worked out. That will be helpful to everyone here in the state. Other than that, though, there is a burgeoning private insurance marketplace, not only in New Jersey, but in states like South Carolina and Florida and Louisiana, where private companies, particularly surplus lines companies, are now interested in writing flood insurance. We recently passed a surplus lines law in the state of New Jersey a couple years ago that allows surplus lines companies that are domesticated here in New Jersey, formed here in New Jersey, to write surplus lines policies here in the state. Partly as a result of that, we now have 48 new surplus lines companies doing business in the state at the end of 2013 that we did at the end of 2012. We went from 151 surplus lines companies at the end of 2012 to 189 surplus lines companies at the end of last year. Gives consumers much, much more choice and much, much more ability to shop their policies to find the coverage that works for them. So I think we're seeing that. The surplus lines companies, what are surplus lines companies? Surplus lines companies are really, the biggest example are the Lloyd's of London companies. The companies that are not in our admitted market, like the standard Allstates, State Farms, New Jersey Manufacturers, Selectives. These are companies like Lloyd's of London and Ace Insurance out of Bermuda that particularly write risks that our admitted carriers don't want to write. But they are, here in the state, they are doing business, and there is a burgeoning private flood insurance marketplace out there if you believe that the NFIP policy or the NFIP program is not where you want to be with your flood insurance. So I'm happy to report that. The other thing I just want to finish up with is what we're seeing kind of long-term in the space of homeowners insurance. And is New Jersey particularly a riskier place to do business now after Sandy? Probably, but I'm kind of a half-full kind of guy, and my take is that when we're going to start to rebuild these properties, and we're going to rebuild them with better materials, to better standards, perhaps elevated, they're going to be better values and better risks for the companies to write, more valuable properties. So I think the homeowners insurance market, particularly after Sandy, especially on the flood side, is going to be a very, very attractive market to insurance companies that come in, feel that they have a better product, can price it properly, and can make that coverage available to the residents in the state of New Jersey. So those are kind of my thoughts at 30,000 feet as to what we're seeing in the marketplace, as to what we see going forward. And with that, I will end. But just to let everybody know, I'll be here through the end of the program. I'm happy to stay, and I'd be happy to meet with any of you, all of you, and to answer any questions that you may specifically have or any other topics that you want to speak with me about. So thanks very much, again, Congressman, for inviting me. Freeholder, thank you very much. And it's a pleasure.